What's up, everybody? Ted here with, the Bodies and Wicks thing. Uh, Undergoing some construction in the office, so that's why you're not seeing, the black background behind me. I don't have the green screen, unfortunately, today, so we're gonna have to do without it, but it's not gonna be for long. I'm gonna be going over XMR shortly, and we're gonna be doing a top-down analysis of XMR, going down from the monthly down to the daily, or actually even further than that, because I feel like there's some things that I was hoping that would happen that didn't happen, but I feel like they're still gonna happen. And after I doing this monthly, this top down analysis starting from the monthly, I think it's more than likely gonna happen. Oops, didn't mean to go here first. So um, there we go. So, first, what I wanted to do is I wanted to go to Coin Market Cap and just show you just how things have changed within the last couple of days, pretty much, uh, or at least recently. Um, Sorry, I may have been too far away from the microphone. Um, but yeah, I feel like there has been a lot of changes within the last 24 to 48 hours, especially within the top 200 of coins. A lot of things moving around. You got Chainlink now up 10%. Um, the FTT token was up like 20 something percent. Now it's only like 3. Terra Classic yesterday was like way up at like 50%. It's still up at almost 100% on the week. But then you got Monero up almost 5%, and Bitcoin Cash up 10%. I mean, it's just been a crazy, phenomenal day for a good day for crypto, and I just to me that makes me skeptical. It makes me always skeptical because it makes me wonder how long it is going to last, right? So, uh, because of that, what we'll be going to next is we are going to be going to the charts. So 1 second here. Let me pull up the charts. All right. So here we go. This is the monthly on the Monero chart here. I don't know if you can see my pointer or not, but yeah, you kind of can. Okay. So this is the monthly, right? So we are going back to February of this year, to where it made a low, right? And if we even go back further, that was a pretty significant low. And as you can see, it made almost 3 lows in a row each month. So you can see where in December it made a low, in January it made a low, and then February it made a low before it finally started to move up again. And when it started to move up again, it got to this high, right? So this high was pretty on par uh, with another high that was right around here. The last or the first red candle going down is where those two highs pretty much were about the same. So we did this. You can see those highs were pretty much the exact same, which tells me that's a good thing for one, because that tells me that that's where the liquidity is, which means that once it gets back up to this spot, if it ever does, which is somewhere around $292, that there is going to be a lot of shorting happening, right? Um, when there's going to be a lot of shorting happening, smart money will generally short it a little bit and then drive it the opposite direction. But we're not going to talk about that right now. What we are going to talk about is this formation here, right? So we have this low here going up to the high, and then it went down to a lower low, breaking these 3 lows right here, right? So these three lows right here. That is where a lot of the liquidity was, and it broke it right here. But then after it broke it, that's when it finally moved up. And when it came back down, right, it looked like it was going to do it again, and then it broke through it again, pulled back up, and then dropped heavily one more time to give it a lower low. Now, when this happens in smart money, this is a formation that we call, or what we notice as a breaker, right? So the breaker that happens is generally the first up candle, right, or the first bullish candle that moves up, or it could be the succession of bullish candles, right? So it could be both of these, right, that move up. But I am going to stick with my guns here and say it's going to be the first candle that moves up, right? And what happens is that once it drops below it, generally what happens, especially once it hits the top of it, and if it doesn't go all the way through it and it just hits it barely and moves up, then you have more of a bullish chart, and you will see the chart continuously move up. But if it falls through and goes lower, then that means I wouldn't say a bearish chart, but then this area, this breaker is what we call it, acts as resistance. And no, it's not like a quadruple highs or three highs or double highs or anything like that acts as resistance, as what most people think, as what retail tells you. No, that's not how it works. This is what acts as actual resistance when it comes to smart money. So now that we've seen that on the monthly chart, we can go ahead and, kind of assume that this is, well, basically going to be the area as to where it's going to act as resistance, and to see where it's going to go from here. So from here, I would move to the weekly and to see what happens next. So during the weekly chart, as you can see, I still have those lows here to where it came down, pulled back up, and then it dropped below, and then it runs up really quick to make that high, and then it drops, gets inside that breaker, right, and then drops inside the breaker again, pulls back up, and then it hits the bearish order block here, which is your last, again, if you've heard me say it once, you've heard me say it a million times, your last bullish candle before your next bearish candle closes below it. Once it reaches up to that point, that acts also as a resistance point. So it comes up here, acts as resistance, and then falls back down again, right? And then as it falls back down again, then we kind of have a little bit of consolidation, right? And this is a lot of distribution right here. When there's a lot of distribution, that tells you that smart money is in the room pushing the charts around. So now that they've got the distribution and they push it down to where they want it to go, they are buying up a lot around in this area, more than likely, right? So since they're, and then what I have here is I have a weekly fair value gap, right? And what have I said about fair value gaps in the past? Well, generally, any kind of fair value gap is an imbalance, and imbalance like to be completely filled. Now, when they want to be filled, they want to be filled not only on the upside, but they also want to be filled on the downside as well. So just moving up through it doesn't mean that it has filled the imbalance completely. I have a feeling that it is going to come back down and try to fill the downside as well. So that being said, let's move on to the daily. And this is where I think a couple weeks ago, whenever I was talking about this, to where people were thinking that this could be a trend line, and I said it was going to be a phantom trend line. And I said, be careful with these because this is what fakes people out, makes people believe that they're going to be trading off this, that they're going to be, uh, you know, buying off of this or whatever, and it is not going to work out for them. You can see there is a almost like a support level here moving right across into that trend line, and then it moves up with it, which you can probably see a lot of people, a lot of retail traders trying to buy along with it. And then what happens once it gets up to a certain point? Boom, it goes against it. And once it goes against it, it stays sideways. So a lot of people that were trying to go long, betting it would go long, you can see that it did not go long. So, and one of the reasons I believe it did not go long is because of there's also a daily fair value gap over in this area right here going all the way across. As you can see, it comes up. I mean, it just, you can tell it just touches the top, comes back down, touches the top, comes back down. I mean, it is just the wicks are all over the place in this fair value gap. So this fair value gap has pretty much been taken care of. So we can move that back and say that that imbalance has pretty much been fulfilled at this point, right? So as that imbalance has been fulfilled, there is still another imbalance above it where that high was that I was talking about, and that is on the daily, right? So it is still probably trying to look to get up here, but it may take a while to get there. And why I think it might take a while to get there is that we have to look at the formation as to what is happening recently. Now, as you can see, we last week or a couple weeks ago, we saw that big drop, right? And then you can see it push back up, and then it gets into that breaker, right? And then you can see it, and as you can see, as it comes up here and gets into this fair value gap, it's also at the top of this breaker, which is acting as resistance. So as you can see, it is holding, that resistance is holding as it falls back down, right? So then it comes back up into the breaker, falls again, and then you have basically a high that is formed, right? And then it pushes back up again, and as you can see, it falls again. So there's 1, 2, 3 spots that are about equal lows. Now, whenever I see that, I see sell side liquidity, right? So what that means is that smart money has set this up to where it looks like it's going to be equal lows, so that way people will set their buy limits, right? So in other words, people will set their limits to something like this. Oops, I meant that was the short side. I meant to do the long side. Oops, did the short side again on accident. Long side, here we go. So they would probably do something like this, to where when it comes back down, they would, enter in somewhere around this area, maybe even a little bit lower, maybe even a little bit higher. I'm not for sure. But they would probably put a short stop loss along the way. And then what would happen is that the path of this would probably drive down into here, right? Oops, hit the wrong button, of course. The path would probably drive down into here and then probably try to push up just a little bit, making people think that it's on the buying path, and then falling again. I don't know if it would fall that far, but it would probably fall far enough to at least fill the fair value gap, right? So maybe somewhere around in here. And I can move this up to about right around in there. So that is what I think what the retail traders are looking at. Now, what I am personally looking at as far as, oops, I hit the wrong button here. What I'm looking at, let me get rid of this too, is I'm going to get a little bit closer here, get in on the 4-hour. And as you can see these highs right here. And these highs all represent liquidity as well. So what I'm thinking is that even though we can get down even closer, and I even drew this yesterday, pulling down into here, is that once it dropped and it hit this, I believed it would buy, and I believed it would buy going up into this area here. Now, I wasn't for sure how high it would actually get, because I believed it was going to get to a certain point and then drop again. Now, right now, it's getting to the point to where I believe it could possibly start dropping, or maybe just a little bit higher. It could possibly get all the way back up to this 100 point, to the 156, before it starts dropping again, because it did fill that daily fair value gap, but it filled it on the way up. Again, it hasn't filled it on the way down. And even if we look at the 1 hour, look, the 1 hour, boom, it shot right through that 1 hour fair value gap, because it made, look, one equal high, and look at how these equal highs are right along these. I think that's the weekly fair value gap, if I'm not mistaken. That is not the breaker. Yes, that would be the weekly fair value gap that I drew. So this is a weekly fair value gap over here. So since it has come up through the weekly fair value gap, hit the top of the breaker, came back down, it has not fulfilled the entire weekly fair value gap. Now that I have drawn the Fibonacci upside down, look where the weekly fair value gap meets exactly the 150%, the 1.5x of this wave that would be going down, right? So what I am believing is that it is right now, it's faking a lot of people out by driving up hard, and then it's getting to a point, very, very soon, to where it is going to be dropping, and probably dropping dramatically, right? Because it is Thursday, right? So this all happened earlier in the week, right? This big drop, right? So then during the week, it made a little bit of a rise, but generally on a weekly basis, the weekly candle will stay the same. So I believe the weekly candle will continue and stay red and fall. It may not fall all the way down to where this is exactly, to this weekly fair value gap. That may roll into next week, but I have a feeling it will fall and fall very soon, and then we'll probably see it. Because look, they're still, especially on the 1 hour, there is still a 1 hour fair value gap that is sitting here at the bottom that has not even been touched. So if I was to get rid of this Fibonacci again, draw one the exact opposite direction, you can see that this 1 hour fair value gap is right in that smart money buy zone, right? And it's also just almost, especially right around here, would probably be the exact middle of the weekly fair value gap, which is where a lot of smart money people like to start piling up on their purchases. So if I was to draw this Fibonacci to find out exactly where the 50% is, 50% looks like it's just a little bit below that fair value gap, but it does come down to the 88.6%, which is just right around this low that happens. If I can get that a little bit wider so you can see it, where this dotted line is. Where this dotted line is, that is where the bullish order block is for this, because that is your last bearish candle before the bullish candle comes above and closes above it. And then it comes back down and almost touches the top of it, but it doesn't exactly touch the top of it before it, boom, it rises up and then continues on, hits the top of the weekly fair value gap, pulls back, comes back up, hits the top of the weekly fair value gap, pulls back up again, and then top of the weekly fair value gap, pulls back again, and then boom, now we're up again. And now I have a feeling we're getting to that point to where people are starting to say, okay, I'm missing out. I'm getting the FOMO, right? I'm getting the FOMO. I should jump in on, XMR, on, the perpetual futures and things like that. Throw it in, I'll throw in 10 at 20x or whatever. Jeez, why does this thing keep moving along with it? And so this is where I have a feeling that people are going to start getting screwed, basically. So it could come up here, right? And this is where, see, it filled in this fair value gap all the way over here. And it also is hitting the bearish breaker, right? So that is one area that it could hit before it starts dropping. Another area that it could hit before it starts dropping would probably be this guy right here. Right, that's number 2 that it could possibly rise up to. And then there is a third, which would be this guy right here. So they're all very, very pretty close to each other. Either way, they're all within very, very, very close proximity of each other. So, and then this one, I might as well just draw this one in here too so you can see it, which would be this one right here that it's already up into. So all these red lines are bearish order blocks, right? This one not so much. This is more I think of a 4-hour or a 1-hour bearish order block or something like that. Oh no, this is the 1 hour. I think this is the larger time frame bearish order block, which I would not worry about, because basically the way the time frames work is that if something happens on one time frame, then you're going to have to flip to one time frame lower to get the exact result of what may happen. So if something happens on the 4 hour, then you're waiting, and you flip it over to the 1 hour, then you're waiting on whatever is going to happen on the 1 hour to see how that is going to play out. And I think that's what we're waiting on, because if we flipped it back to the 4 hour, right, and that's where I drew the Fibonacci that would be going downward, right? And then that's when I would expect the price to go up into the discounted zone before it started dropping again. So to get into the discounted zone to find out where it would be dropping again, I would flip it back to the 1 hour and then start focusing in on where those drops might start happening. And so it's looking like they may start happening now, somewhere around 155, 156, all the way up to about 157. So anywhere in between here. I hate to be the bearer of bad news, or who knows? Maybe I'm just, I don't know. Maybe you call me a pessimist if you want, but it just, to me, to see XMR previously hit 3, especially 3 months in a row at the exact same low, and then get lower. Right? And then we're seeing that again. We're seeing 1, 2, 3 lows at the exact same spot. And to not think that it's going to possibly drop into the fair value gap to fill the rest of it, as smart money normally likes to do. It likes to fill the rest of a fair value gap if it hasn't already filled all of it already. Then I would be kidding myself. Now, I could be completely wrong about this. I could be 100% wrong about this, and that this could be running up. And, who knows? This could be a runaway, and it never comes back down. Or it could be a runaway, and then it comes back down maybe a few months later. I don't know. But I don't see that happening in a few months. If it's going to be running up, then it's going to be running up, and it's probably going to stay that way, unless there is a dramatic thing that's going to happen probably about 2 or 3 months from now. But we just started a new month. You got to think about that. We just started a new month in September. So what's going to possibly happen in September is that it could possibly drop to a low, and then we have a green month after that. That is what I am expecting, because we've already hit this low, and this low. So I would expect it to drop again, and then after that, September be a green month after that. I think right here, I drew this up here. I think this would be the highest it would get if it were to get to a high spot before it would start dropping again. I didn't draw this all the way down, even though I could have. But the highest it could possibly get would maybe 164 before we do see, a drop all the way back down to somewhere around 135, 134, something like that. But that's quite a bit of a drop, and that may take some time to get there, maybe half of September, something like that, which is why I don't think it would probably get up that high that quickly, which is why I think right now is where we're going to start seeing the drops happening soon, because it hasn't gotten to the break of structure yet, right? So if I were to throw on my indicator, right, the one that draws out all the fair value gaps and all that stuff for me, it shows you that right here, we're already, look, it even shows you that we're hitting a rejection block. So if I spread this out and spread this up, you can see where it says RJB. And RJB means rejection block. So it's getting up into that rejection block, into the fair value gap. Here's another fair value gap. And also, here is another bearish order block. And here is another rejection block. So those lines I was drawing are almost exactly on par with this indicator that I have. All right. Indicator again is called super order blocks by Maku Chaku and FA. I kind of made my own. I kind of went into Pine Script and fiddled around with it a little bit and made my own, and it's called BXW Smart Money Tools by Maku Chaku and FA. Reading their Pine Script thing, it says to at least leave their names in there. So I did them the courtesy of at least leaving their names in there, not trying to claim it as my own, because there's no way I could have coded that, because that was some extreme code, and if you look at it. But I do know enough coding, at least Pine Script anyway, to where I could, kind of twist it and make it my own. The good thing about this code is that if you were to switch time frames, is that it also changes, the fair value gaps, the rejection blocks, and things like that along with the code. So if I were to go to the 4 hour, you can see that it is coming up into, you see it says fair value gap, the one that I've already drawn, and it's also coming up into a rejection block. So that's why I think it's happening now, and we'll see what happens next. But that's all I got for you guys for right now. Thanks for watching, and remember to always keep your pants on.